Good morning, families. Welcome back to the American Family Survival Network. I'm your host, Jeffrey Snipes. I hope you're doing well. Today we have an article from Silver Doctors, one of our premier affiliates at the AmericanFamilySurvivalStore.com. Please visit Silver Doctors for excellent information on our economic situation, as well as great deals on silver and gold bullion at sdbullion.com. Red flag could be telling us the reset is here. This is by Jim Willie, posted on October 14th by the Doc. Red flag could be telling us the reset is here. We might be witnessing a pretext in action to cover for the rejection of the U.S. dollar, the refusal to accept U.S. Treasury bills at ports in return for cargo delivery. At risk is the stoppage of all goods shipped from Asia to the United States. The stakes have risen. The Asians are out of patience. The red flag could be telling us that the reset is here. This is by Jim Willie of the GoldenJackass. World trade has fallen for the second quarter in a row. The decade of stagnation of industrial production in the United States, Japan, and European Union can be blamed on financial engineering, housing bubbles, war, and recently on destructive monetary policy and QE bond purchase program. It is not stimulus, but rather a destroyer of capital. The West contains several nations with heavy industrial emphasis, hardly advanced economies anymore. They risk a fall into the third world from a generation of outsourcing, asset bubbles, and financial fraud as soon as the new currency regime is installed as part of the financial reset. The CPB Netherlands Bureau for Economic Policy Analysis, a division of the Ministry of Economic Affairs, just released its preliminary data of its Merchandise World Trade Monitor. Trade volumes rose 0.7% in June, sequentially after falling 0.5% in May. Trade was flat year over year, but below the volumes of December 2014. On a quarterly basis, world trade fell 0.8%, contracting for the second quarter in a row. Without a doubt, the global economy is stuck in a powerful recession. No positive constructive remedies or proper reform policy have been put in place since the Lehman failure. Exactly none. To be sure, none have been attempted. Worse, the CPB recently adjusted its world trade data downward, going back several years. The newly updated data depicts a post-financial crisis recovery of global trade, which is considerably weaker than their original data had indicated. These downward adjustments of 2% to 3% came in a climate of stalled economic growth, according to the IMF. Much of the Western national data is rubbish. Forced positive by the common neocon fascist dictum. The chart of the CPB's World Trade Monitor Index shows the old data released as of July 2015, the blue line, and the newly adjusted data released, the red line. Observe the horrendous 4.4% downward adjustment from the peak in global trade volumes in the original data for December 2014 and in the current data for June 2016. They confirm a broad-based global recession of about 1%, in full contradiction of the nonsensical, constant Orwellian propaganda of sluggish recovery, spouted routinely in the drumbeat of mainstream news. So this is what we're looking at here. Current data adjusted as of July 2015. This is the chart. I will have an article. I'll have a link to this article in the description of the video. So please feel free to take a closer look at that by visiting the link. And world trade is a direct reflection of only the goods producing economy. Services are not shipped around the world. An airline flight of a group of consultants is not considered world trade any more than tourism. Finished products, raw materials, and intermediate goods like car parts for assembly are shipped regularly. So industrial production, excluding construction, is key. The trend is terrible for advanced economies. Global industrial production, excluding construction, rose 0.6% in June after a 0.3% decline in May. The index for industrial production in advanced economies rose to 102.5, below where it had been in January at 103.4, a level reached after the financial crisis in December 2012. The industrial output remains below the glory days before the financial crisis, when the index peaked at 107.8 in February 2008. The global economic recession is as painfully evident as it is denied. The current level for the index has returned almost exactly to where it was in April 2006, right before the Lehman failure and ensuing crisis. The world has endured a full decade of stagnation without any remote attempt at remedy or reform. While the bank syndicate remains in power, remove rose-colored glasses. Combine the abandoned austerity budget initiative for the U.S. Gov with the ongoing big bank welfare, known as QE, the preserved insolvent banks in dire need of liquidation, the expanding welfare state, then sprinkle on Arab human garbage and stir with the maintained constant war. Thus no economic recovery, just talk of such. To varying degrees, the gripping recession has occurred in the United States, Japan, and the Eurozone. A few other so-called industrialized advanced economies have exceeded their pre-financial crisis levels. Industrial production has shifted to emerging economies, capitalizing on their cheap labor for many years, such as China. Decades ago, the vast array of companies in the U.S. and eventually in Europe and Japan began outsourcing production to emerging economies in foreign lands. Hence, industrial production in emerging economy has surged over this period. This was particularly the case after the financial crisis when companies in the U.S., Europe, and Japan redoubled their efforts to get production relocated offshore, using easy money from the U.S. Fed, which moved the cost of money to near 0%, where it has remained for 7 years. However, an extreme point of caution, the emerging market U.S. dollar-based debt stands at over 5 to 9 trillion. Depending on the definition of such nations. Some estimates are higher. The debt is on the verge of default due to their currency declines and reduced commodity income, including from crude oil. Thanks to Wolf Street for the contribution. So the Hanjin shipping crisis. The Hanjin crisis begins new headache to U.S.-based importers. Trailers stack up, adding to client costs while trailer shortage looms. The idle containers are clogging the entire system. Confusion abounds as emergency measures are being sought. A drop-off point system for the empties is being considered. Soon the used containers will become a newly created market for cargo owners. The bankruptcy of South Korea's Hanjin Shipping Company Limited is causing ripple effects for importers bringing goods from Asian factories to the U.S. marketplace. Port facilities are being jammed, while a shortage of trailers is created to move ocean shipping containers on U.S. roads and highways. The world's 7th largest container carrier owns and transports more than 500,000 containers. They are in many cases clogging up ports and truck yards, tying up trailers that cannot be used to handle other cargo. The growing chaos is beginning to worry freight handlers at U.S. ports on the West Coast. Witness the first sign of follow-on effects from the failure of Hanjin. The problem stems from Hanjin's shortage of cash, which has stranded $14 billion worth of cargo owned by companies such as HP Incorporated, Home Shopping Network, and Samsung Electronics. Much of the cargo have been stuck on the 100 ships at sea because cargo handlers, tug operators, and ports are refusing to work with Hanjin unless they are paid up front. They are all aware of the risk of not receiving payment. In recent weeks, terminal operators in the California ports of Long Beach and Oakland are not taking back empty containers. Many in the industry doubt Hanjin will pay storage costs, which has led to a growing backlog of empty containers in the trailers they sit on. The containers are stranded. Thousands of Hanjin containers are on trailers kept out of circulation. The uncertainty surrounding Hanjin appears to be pushing truckers to lock in trailers from the local organization pool. Maybe the vast pile of containers can be fashioned into sleek condominiums like in Detroit, like Lego communities. Simply stated, if a container reads the Hanjin label, there is no place for it to go. One intermediate solution put forth is the creation of a drop-off point for containers after their cargo is discharged in Southern California. Shipping industry executives are discussing a staging area where truckers could drop off empty containers to free up trailers. Another midterm solution has been proposed. The cargo owners could resort to buying the containers they hold, which would clear up any legal uncertainty around them, thereby enabling the return of chases. A new niche market is emerging. Global supply chains are paralyzed after the world's 7th largest container shipper filed for bankruptcy, with its assets frozen within the system. Eastern Asian mega corporations are not too big to fail. not coddled and bailed out like in the West. Hyundai Merchant Marine might purchase some of Hanjin's diverse assets. Shipping rates have been reduced amidst a glut as the global economy is due for a large slam. August 31st will be marked on the calendars. On that day, the largest casualty finally slammed global trade ports when South Korea's Hanjin Shipping filed for court receivership after losing its bank support credit lines, which left its assets frozen. Ports from China to Spain denied access to its vessels. Hanjin Shipping is South Korea's largest shipping firm and the world's 7th biggest container carrier. It is a truly huge player. It operates some 70 liner and tramper services around the globe, transporting over 100 million tons of cargo annually. Its fleets consist of some 150 container ships and bulk carriers. It commands 4 regional headquarters in the U.S., Europe, and Asia, and Southeast and West Asia, with nearly 5,000 people on global staffs. They run numerous major ports for the world-class logistics network. Other shipping firms will go bust soon. Even leader Mahler Maersk is in deep trouble, now considering a restructure. So, folks, as you can see, the global economy is going through some turbulent times. So we need to make sure that we're preparing and that we're doing what's necessary to protect and safeguard our families. So please go to the American Family Survival Network and the AmericanFamilySurvivalStore.com today for all your family's emergency and survival needs. And please remember to protect and safeguard your family. Fear not, and God bless. Thank you so much. Have a great day.